Welcome back to Investing Talk Podcast. Today, we're diving deep into a company that's, well, getting a lot of buzz, EOS Energy Enterprises. And the big question we're tackling is one we hear a lot from you. Is EOS Energy a good time to buy now? We've done a comprehensive assessment of the company looking at data from July 10, 2025 to really pull out the most important nuggets for you. We're covering everything from, its financial health to market sentiment. Our mission today is simple. Cut through the noise, give you the clear facts, and help you understand the landscape of this quite speculative investment. Basically, we want to give you a shortcut to being truly well-informed, whether you're prepping for a meeting or just really curious. Annie, before we dive in, if you're finding these deep dives valuable, please consider subscribing, liking, and maybe dropping a comment. It really helps us bring more content like this your way. And if you're feeling extra generous, you can always support us by considering buying us a coffee. The link's usually in the description. All right, let's get into it. EOS Energy Enterprises. When we look at the fundamentals, its financial health, what's the core story here?
Right. Well, the first thing to understand, and it's critical, is that EOS Energy is still very much a development stage company. They're in the energy storage sector. Our assessment shows it's not just unprofitable right now. Its whole future really hinges on a technological breakthrough actually working out at scale. You just don't see consistent revenue growth yet or profitability. Their financials typically show pretty high operational losses, negative net income. So they haven't really demonstrated sustainable profit margins or, positive cash flow trends. Not yet.
Okay, so high losses, not profitable.
Yeah.
But they're still operating. How are they funding all this? What does that tell us?
Exactly. That's the key. Historically, they've relied really heavily on debt and equity financing. That's how they fund operations, capital expenditures. And this has led to, well, elevated debt levels and a recurring cash burn. They're spending more than they make. Looking ahead, any future earnings projections you might see are, frankly, highly speculative. It all depends entirely on successfully commercializing their battery technology. This isn't like analyzing a company having a bad quarter. It's more like placing a bet on an unproven future.
Got it. So, given that picture, how does EOS stack up against its competitors? The energy storage space is pretty hot right now.
It is, and it's fiercely competitive. It's really dominated by established players, big names with significant resources. Now, EOS's zinc-based battery technology is interesting. It's a potential differentiator, definitely. It offers a unique approach that theoretically could shake things up. But, and this is a big but, it currently lacks the scale. It doesn't have the clear competitive advantage we see in the market leaders. They're still playing catch-up, basically, in a big way.
Okay, that makes sense. So if the financials are that speculative, the next big question is, how do you even value a company like this? Do traditional metrics even work here?
Yeah, that's tough. Trying to value EOS with traditional metrics, it's like trying to measure a ghost, honestly. Key valuation multiples, things like price to sales, price to book, price to earnings. For EOS, they're either way up high, totally meaningless, or just plain negative. And these aren't just bad numbers. They're really a signal telling you this is a pure bet on potential, not current performance. You're investing in the idea, not the balance sheet. Because, the company has minimal revenue, or it's very speculative revenue, often a low or negative book value. And it just isn't profitable yet. And compared to more mature companies in the energy storage sector, EOS is inherently more speculative, so it trades at these higher multiples relative to fundamentals that, well, they don't really exist yet in a stable form. Even doing something like a discounted cash flow analysis, a DCF, where you try to project future earnings. It's largely theoretical at this stage. The future cash flow projections are just too unreliable.
Right, because the inputs are just guesses at this point.
Exactly. Too much uncertainty.
Okay, so fundamentals are shaky. Valuation is tricky. What's the market actually doing? Let's talk technicals. What does the recent price action tell us?
Okay, so the current price as of July 10th, 2025 was hovering around $4.71. But what's really striking is the huge range in recent analyst price targets for the next year. They literally go from about $4.46 all the way up to $55.
Wow, $4.46 to $55. That's a massive range.
It is. And that extreme dispersion tells you volumes about the uncertainty surrounding this stock. However, if you look at the more short-term forecasts, say for the next 6 months, they tend to cluster a bit tighter, mostly between about $4.50 and $7.44. And looking at the recent price charts, you see suggested support levels kind of near that $4.50 to $5 mark. Resistance levels look like they'd likely come into play around $7 to $8. But the main characteristic here, high volatility. It's a speculative stock. The overall trend is really unpredictable. You could see sharp rallies, but also equally steep declines. That high volatility is just a constant factor you need to be ready for.
Okay, we've covered the financials, the tricky valuation, the volatile charts. Let's zoom out a bit. What's the general feeling, the sentiment around EOS, and what could actually move this stock?
It's definitely a mixed bag. Now, the analyst consensus rating is actually a strong buy, which might sound great.
A strong buy after everything we just discussed about the fundamentals and valuation.
Right. It might surprise some people. But, and this is crucial, you have to understand that analyst coverage is pretty limited. And like we just said, those price targets are incredibly spread out from $5 to $55. The average target is around $22.83 over a year, but that average is heavily skewed upwards by a few very optimistic outliers.
Okay. So that strong buy isn't necessarily based on broad agreement, more like a few bulls pulling up the average.
Precisely. When you see such wide target ranges, it's not a sign of certainty. It's a sign of deep disagreement or, a high degree of speculation among the analysts themselves. There's no clear fundamental consensus there. And if you look at retail investors, social media, the sentiment there is generally mixed, maybe leaning cautious. People are aware of the speculative nature, the past volatility. Also, interestingly, we haven't seen any significant insider buying reported recently, and analyst coverage has actually slightly declined over recent months. That's not typically seen as a bullish sign.
Okay, so complex picture on sentiment. With all that in mind, what are the actual triggers we should watch for? What could push this stock up or maybe keep it down short-term and long-term?
Short-term, some analysts do see potential for price spikes, maybe up to that $7 or $8 resistance level within months. But I have to stress this again, that comes with all the volatility and the very real risk of sharp pullbacks. Don't forget that. Upcoming earnings reports could also be short-term catalysts, naturally. Though, frankly, expectations for major operational improvements remain pretty low right now. Now, long-term, the significant upside, the home run potential, lies entirely in them successfully scaling up that zinc battery technology and, crucially, securing large, impactful contracts. That's the dream. Beyond the company itself, you also have broader factors, things like regulatory changes in renewable energy policy or maybe significant government grants. Those could profoundly impact its long-term prospects, for better or worse.
Right. So we've laid out the foundations, the competition, the valuation headaches, the catalysts. But every investment, especially one like this, has risks. Let's talk about the flip side. What are the key risk factors we absolutely need to keep in mind with EOS Energy?
Oh, the risks are substantial. You really need to be aware. First, stock-specific risks. We mentioned high volatility. That means large, unpredictable price swings can happen fast. There's also liquidity risk. It's a smaller company, lower market cap, lower trading volume sometimes. That can make it harder to buy or sell shares quickly without significantly impacting the price. And critically, those financial health concerns, the recurring losses, the negative cash flow. That means there's a heightened risk of further dilution for existing shareholders. They might need to issue more stock or even face some kind of restructuring just to keep the lights on.
Okay, those are company specific. What about bigger picture risks?
Yeah, beyond EOS itself, you have sector and macro risks. Intense competition, as we discussed, from established battery and energy storage giants. That's a huge hurdle. And then wider economic shifts. Changes in government policy related to energy, fluctuations in raw material prices for their batteries, or changes in interest rates could all hit their performance or funding ability.
Okay, understood. So, the moment of truth. After digging through all of this, let's circle back to that original question. Is EOS Energy a good time to buy now? What's the bottom line recommendation from the assessment?
All right. Based on our assessment, we've rated EOS Energy a 4 out of 10 for short-term trading potential and a 5 out of 10 for long-term investing potential.
4 and 5 out of 10. So not exactly a ranking endorsement.
No, definitely not for everyone. The rationale is pretty clear, really. The company certainly offers speculative upside potential. That $55 target shows someone believes. But the significant risks, the negative fundamentals we talked about, the high volatility, the crowded competitive fields, they severely limit its attractiveness for most investors. And remember those analyst targets. Yes, they average out optimistically, but they're so widely dispersed, which itself signals a huge degree of uncertainty about the future.
So it's clearly not a fit for every portfolio. Who is this stock potentially for then? Are we talking short-term play, long-term hold, or something else?
That's really the key question, isn't it? Okay, for short-term entry, that price range of maybe $4 and $55 seems plausible. It's near the current price and where support seems to be. However, for short-term trading, this is only recommended for traders with a very high risk tolerance, people who can actively manage their positions. Stop-loss discipline is absolutely critical here. You have to protect your downside. Now, for long-term investors, it's only suitable for very aggressive investors, the kind who might consider accumulating shares on dips maybe below $4, and crucially, only if the fundamentals show clear, sustained signs of improvement.
Definitely not a core holding for most long-term plans.
Absolutely not. Not recommended as a core holding. It could potentially be a very small piece within a well-diversified, highly speculated part of a portfolio, but that's it. And just as optional guidance for those thinking about it, one could consider a stop loss maybe around $4. That's just below recent forecasted lows and a kind of psychological support level. For taking profits, maybe that $7 to $8 range makes sense near the upper end of those short-term forecasts and potential resistance. But the final overarching advice for you, the listener, is this. Only investors with a very high risk appetite and a really clear understanding of speculative small cap stocks should even consider EOS Energy at this stage. For most people, honestly, it's simply too risky right now for either short term trading or long term investing.
Wow. What an incredibly thorough deep dive into EOS Energy Enterprises. We've really peeled back the layers here, haven't we? From the core financials, or lack thereof, to market sentiment and all those risks. This assessment really highlights how important it is to look beyond the hype, to understand not just what a company is doing, but why it matters for its future and what those potential pitfalls really are. It definitely leaves us with a compelling thought for you to consider. When you're chasing that allure of high reward, how much risk are you truly, genuinely willing to accept? And how thoroughly do you really understand the unique, steep challenges of betting on a development stage company in such a rapidly evolving, cutthroat market? Something to think about.